All right, Matic, TA on the daily, the weekly, and the monthly. So we'll start off on the smaller picture and zoom out and see the important key levels to look at. So, snapshot on the daily to get us off right away. We're under the 200. This pink line is the 200-day EMA, and that is a key level that you should always be a little bit more bearish than bullish if you're under that level. And you might say, well, maybe opportunity lies ahead, right? You buy under the 200. Prices, by definition, have been there for the past 200 days, right? That's why you have these moving averages. And although that might be correct, that is also a sign of trouble on any asset, plain and simple. And most, are doing much worse than Matic. I'm not picking on Matic, just saying a general information that just because you're under the 200-day doesn't mean opportunity lies ahead. That's like saying, I'm buried half up to my waist in concrete, and this is the worst that it's going to get. Just wait a little bit longer. All right. So looking at that, having said that, we're treading water, right? We're treading water better than most, but we have to watch a key level. What is that key level? Based on the daily chart, we're looking at this low, around 69 cents here. If we lose that, right, I know that's a ways away. Let's see how much we got to drop, right? We're still, 23, 25% away from that happening. So I'm not saying we're going back to that, but that is your key level that you need to be watching, and it becomes a little bit more clear even on the weekly chart, and we'll get to that. So if we lose that, the odds would just go way up that we're going to go back and test these kind of lows. Maybe you find some support around the 60-cent level, as you can see there. Some key touch points there, but more likely you're going to be dropping a little bit harder than that, because that is kind of our level that we really got back above our head above water here, and we're just treading, right? We're trying to get more bullish, right? Matic is one of the more bullish looking charts in crypto, but based on the daily chart, we're still okay as long as we can, tread above 69 cents level. Now let's zoom out and see if that's even more significant. Now we get the little bit bigger picture, right? Coins that went to outer space very quickly tend to hesitate on building support levels, and Matic is a perfect example of that. You can see the long base platform before Nukedown to the upside, and our previous drop right back in June came right back to our initial hesitation really after this moon mission. So that is our key level for sure. You want to be looking at weekly closes, and that is our kind of support zone, 30 to 40 cents. I know that's still kind of a rough, big, a bigger zone, but that's it clearly. If we lose that, I mean, there's nothing else below, right? So I'm not saying we're going below that. I'm not saying we're going back to that. I'm saying here is your clear support zone, and I would think that would hold because the majority of people bought, at this level or higher. Are you in that boat, right? Did you buy Matic in this level? Then you're probably out of the market already, right? You're probably happy with your up teen triple X gains, right? So having said that, now if we lose that 69-cent level, right, you can see that right there. If we lose that, I mean, where's the next level, right? There's not a whole lot below that. Maybe you get some hesitation, like we said, around 60 cents. You got the kind of initial low wick here. But really we're looking at major levels. If we ever go down to, 40 cents, 30, and anywhere in the 30s, right, those are big buy levels. And it's not saying you can't go through it, but you can buy at 35 cents, put your stop loss here, and, forget about it, right? You need to be buying or longing at support and shorting or selling at resistance levels. That's how any pro trader will do it. Anything other than that, you're just gambling more than not. So here's your big support zone on the weekly chart, and your free fall on under 69 cents. So look at all the moving averages on the weekly. We're really clustered up here. So we're okay. We're fighting the good fight. I don't know what that means. And we're holding resistance and support at the same time on the weekly moving averages. So let's hold here, right? If we start to, your warning signs, right, are going to be if you start to make lower lows again. So if we, come under 76, 77 cents, then we're probably going to 69 cents. If we go under 69 cents, we're probably going back to at least, 60 cents, but there's not really support there. Then the big support is your big zone down here, 40 cents, right? That's it, plain and simple. On the weekly chart, let's go out to the actual look at the actual moon mission that was Matic back in the day, right? I mean, look at that. Look at that monthly liftoff there. That is pretty amazing. So on the monthly chart, right, let's remove those moving averages. Not really help there. On the monthly chart, we're kind of holding, you can kind of see this resistance level here, right? That was our key level that we broke, which is why we got the super flush. And then look at where our rally failed on the monthly. I mean, right back. You break support, you flip it, becomes resistance. So that's held resistance since July, right? So that's the level to flip back, $1.05. You see a monthly candle close above $1.05, Matic's ready to roll again. So not all is doom and gloom, but you need to be prepared for the worst and the best. Matic will be back, but in the meantime, now you know what to be watching for. Candle closes. We don't want to be closing under 48 cents, right? You don't want to form that, but if we wick down here, that'd be okay, right? Wicks are fine. Candle closes is what's most important, and if you need help on that, just put on a line chart. It'll only do closes for you. I mean, clear cut. Look at that line, right? That is a line in the sand for Matic to turn back macro bullish. A monthly close, I mean, even above $1, I'll give you $1, right? $1.05, right? These low closes, right? $1.08, you see there, $1.12. So if you see monthly closes, you see that blue line up there, we're good to go. Matic, update, like, subscribe, thumbs up if you haven't already. Appreciate you watching this long if you have. Rock stars, 47 gold stars, just to you.